Bitcoin to $250,000 this year? Some of the biggest macro experts believe it's not just possible, but inevitable. With global liquidity surging, M2 money supply hitting all-time highs, and governments printing trillions, Bitcoin is primed for an explosive breakout. But here's the catch. Is this your last chance to buy before it skyrockets? Or is a final market crash coming first? In this video, we break down the data, expert predictions, and market signals you need to know before it's too late. Let's dive in. The correlation between Bitcoin and M2 money supply. M2, a broad measure of the money supply, has reached an all-time high, signaling a surge in global liquidity. Historically, Bitcoin has had an 82% correlation with M2, meaning that when M2 rises, Bitcoin's price follows suit. However, this correlation is not always perfect. Certain crypto-specific events, such as exchange collapses or major institutional adoption, can disrupt this pattern, either positively or negatively. For example, in late 2022, despite M2 levels rising, Bitcoin's price fell sharply due to the collapse of FTX, a major cryptocurrency exchange. On the other hand, in early 2024, when Bitcoin ETFs were launched for the first time, Bitcoin's price surged, irrespective of M2 levels. These anomalies demonstrate that while M2 plays a significant role in Bitcoin's price action, other factors such as regulatory changes, institutional interest, and macroeconomic events can also influence its movements. Why is the M2 money supply expanding? The US money supply has been growing at an accelerated pace, fueling speculation that Bitcoin's price will follow. In January 2024, the M2 money supply increased by 3.9% year-over-year, marking its fastest growth rate in 30 months. This was also the 11th consecutive month of expansion, bringing the total US dollar supply to $21.6 trillion, just shy of its all-time high from April 2022. Globally, the money supply has surged by $2 trillion over the past 2 months, reaching its highest level since September 2024. Several macroeconomic factors contribute to this trend, including government stimulus programs, increased lending, and fiscal policies aimed at economic recovery. With more money circulating in the global economy, investors seek assets that can retain or increase in value, and Bitcoin has historically been one of the biggest beneficiaries. The global perspective on liquidity expansion. While the US money supply expansion is a crucial factor, the global economic landscape also plays a significant role. Raoul Pal, a well-known macro investor, emphasizes that China is a key player in driving global liquidity. Chinese bond yields have dropped to around 1%, indicating that the country has limited room to maneuver before it must inject more money into the economy. At the same time, other countries are also stimulating their economies. The US has injected $560 billion, Germany has added over $500 billion, and China has pumped $300 billion into its banking system. These stimulus measures mirror the conditions that led to the massive Bitcoin bull run of 2021, making many experts believe that history may repeat itself. Bitcoin's short-term and long-term price projections. Despite recent stagnation in Bitcoin's price around the $80,000 range, experts predict that it will soon break out due to the expanding money supply. If the historical correlation holds, Bitcoin could reach $100,000 by May 2024, with a potential surge to $250,000 by the end of the year. Arthur Hayes, a prominent crypto expert, believes that while market fear and uncertainty persist, Bitcoin remains in a bull cycle. However, the bull run has been more concentrated in Bitcoin compared to altcoins, suggesting that investors are prioritizing safety over speculative digital assets. Hayes argues that the current market lull is a temporary phase, and Bitcoin's long-term trajectory remains highly bullish. The role of political and economic factors. One major concern among investors is the impact of geopolitical events, such as potential trade wars under Donald Trump's leadership. Some fear that increased tariffs and economic restrictions could dampen Bitcoin's growth. However, Arthur Hayes believes that Trump's aggressive trade policies may ultimately lead to higher liquidity as governments inject more money into the economy to mitigate short-term economic pain. Hayes suggests that the US government will eventually print massive amounts of money to support economic growth, refinancing debt, and maintaining financial stability. This liquidity influx will benefit Bitcoin, as investors seek refuge in decentralized assets that are not subject to government control. The future of money printing and its impact on Bitcoin. Looking ahead, global money printing is expected to continue at an unprecedented scale. The US, China, and the European Union are all implementing stimulus measures to support their economies, leading to inflationary pressures. In the US, for example, policymakers aim to stimulate domestic industries, create jobs, and maintain economic resilience in the face of automation and AI-driven workforce disruptions. Europe is also gearing up for increased military spending to bolster its defense against geopolitical threats. If these measures lead to more liquidity injections, Bitcoin could experience another historic bull run similar to 2021. The combination of declining fiat currency value and increasing institutional adoption of Bitcoin further strengthens the case for a significant price surge. Altcoin market and emerging opportunities. While Bitcoin remains the primary focus, altcoins continue to present unique opportunities for investors. Platforms like Gecko Terminal, developed by CoinGecko, offer valuable data insights on decentralized exchanges, allowing traders to identify low market cap altcoins with high trading volume. One noteworthy development is the integration of CookieDA's real-time social analytics into Gecko Terminal. This feature enables traders to track emerging trends and identify altcoins gaining traction on social media. Such tools are becoming increasingly important for investors looking to diversify their portfolios beyond Bitcoin. Bitcoin's final crash before the next rally? Despite the overwhelmingly positive long-term outlook, some analysts predict a final shakeout before Bitcoin's next major rally. Market corrections are a natural part of any bull cycle, and Bitcoin has already experienced a 30% decline from its recent highs. Arthur Hayes reassures investors that market cycles involve periods of consolidation and correction before continuing their upward trajectory. He remains confident that Bitcoin will recover and potentially reach $250,000 by the end of 2024. While short-term volatility may shake out weak hands, long-term holders are likely to benefit from the broader macroeconomic trends favoring Bitcoin. The expansion of the global M2 money supply, combined with geopolitical and economic factors, sets the stage for Bitcoin's continued growth. Historically, Bitcoin has followed M2 expansion with a lag of 8 to 12 weeks, suggesting that its next move is imminent. The content provided is for informational and educational purposes only and should not be considered financial advice. Always do your own research, assess your risk tolerance, and consult with a licensed financial professional before making any investment decisions. Crypto markets are highly volatile. Invest wisely. Despite short-term market corrections, macroeconomic experts remain bullish on Bitcoin's long-term prospects. With increasing liquidity, institutional adoption, and growing demand for decentralized assets, Bitcoin could very well reach $250,000 by the end of 2024. Investors should remain informed, track global liquidity trends, and prepare for the potential opportunities that lie ahead in the evolving crypto landscape. So, that's it for today. If you like this video, then please hit the like and subscribe button for more videos. Thanks for watching.